Okay, here we go. Weekly roundup.
I'm
Ben
ready.
and Scott. What day is it today?
March 4th.
4th, 2020.
2.
2022. I skipped 2 years.
We went backwards 2 years. I definitely do not want to go back to March 4th,
You know what?
2020.
I was reading an article on that today, so maybe that was what stuck in my head. It's hard to believe it's almost exactly 2 years.
Almost exactly 2 years.
Not
Yeah, actually,
that I
this
want to revisit it, but
no, I remember this week. It was choppy week. Made money in puts this week for clients 2 years ago. The bottom came in at the end of March, so another 2 weeks out. Yeah.
Okay.
Yeah.
Well, on that note, 2 years later, another choppy week.
Gosh, yeah.
We're running around in circles here.
It is. It is.
So tell us, Ben, tell us all about the week.
Right. COVID ended right into a war.
Yeah.
It seems like it is the roaring 20s for the wrong reasons.
Yeah. If anybody ever thought we had an easy job,
yes,
it's almost predicting the future, really, right?
Yeah. It's an unpredictable framework presently.
Definitely. So what did happen in the markets this week? I know the Russian markets were halted. I know we talked a bit about that. What else happened?
Tons. I mean, tons happened, I guess, from a market construct this week. Also, we had central banks out this week. Yeah, I mean, you make a good point that they closed the Russian market, and it's been closed ever since. And all of the through as we move throughout the week, as here as well, we had all of the brokerages stop trading Russian stocks. So there's ADRs, which are American depository receipts that are foreign companies that trade on US exchanges. So as the week went on, and I believe it was yesterday where the final kind of US brokerage that would trade in Russian stocks said they wouldn't do it anymore. So Lukoil, Gazprom, Yandex, like these names are kind of halted. And Sberbank, which I think we referenced in one of the dailies last week, they had earnings yesterday and they beat by 6 cents. So it's interesting to see what's happening. I mean, all of these companies like Lukoil, when it was halted, I think it was halted around $7. Their dividend last year was $6.26. Definitely lots happening that's really obscure with Russia invading Ukraine. Lots is happening on their corporate side as well. So, I think I said it a week ago. I said, the headlines are going to be all about Russia, Ukraine throughout the weekend, and I expect that to continue here. The other component to that, of course, is commodities. And so, commodities across the board have been going up. Wheat, I think, touched $13 a bushel, kind of all-time high. So, the last, I guess if we were to back up 3 weeks, we'd probably look at it and say, I had a pretty high certainty that inflation would slow as well. Now that's obviously completely out the window. And so now we have inflation ripping everywhere. And that causes many knock-on effects that we're trying to see where and who and what's going to be impacted.
Mm-hmm. You mentioned raising the rates. They raised it 0.5%, which is a bit of a joke, isn't it?
Yeah. So yeah, we've been at 0.25 since March of 20. And so yeah, they went up from 0.25 to 0.5. And I think, as I commented on one of my dailies there, the economists from the banks are saying, well, this is going to incite investors to start saving more money because now they're going to be paid 0.5%, which is a bit ridiculous. But they're raising rates, I think, because they have to. And the likelihood that they're going to have to cut rates at some point this year again.
Right.
Yeah.
So will they raise rates again, do you think, or no? They're just going to cut rates next. What's the next move there?
I mean, Powell spoke on Wednesday this week as well, and he said they're going to raise. So they both seem really head down, convinced that they're going to raise rates. And I say both, I mean, Bank of Canada and the FOMC, they both look head down. We're raising rates. So I'd expect we probably get a couple more. Bank of Canada, probably one or two more. FOMC, if they go 50 basis points this month, I think it could be it. Could be one and done. Market's not pricing that in yet, but it could be. You know, as this week has played out and as commodities have gone higher and as oil's gone higher, you know, it's a time to go back and look and see, you know, what happens like this and when have other times in history have we had this kind of setup. You know, this is a little bit like the environment in 2008 where oil prices were ripping. Obviously, we had a financial crisis, which was different. But, you know, if you look back since, I guess, 1946 was the kind of the data I've been looking at when oil prices have run like this, where there's an oil spike. It's happened kind of 12 times. It's happened 11 times, and we've had a recession every time after an oil spike like this. So, you know, we have growth slowing, we have oil prices spiking, and we have a war. So, you know, I think that the things that I've been saying since the start of the year, or even since December, was we want to have some exposure to US dollar and bonds and gold. I have significant more certainty today that that's what you want to own. And when I look across stocks, you know, if the stocks haven't corrected yet, then there's nothing that I've been seeing here that's making me super excited to want to buy them, because things don't look great and the uncertainty is off the charts high. The only other time I kind of remember this kind of feeling was kind of 2001 after the towers came down, where you got this geopolitical uncertainty that you can't really game.
Mm. So what do you do in the portfolios when this happens?
Yeah, so the good news is in January, when the market's corrected more than I'd expected, and if we kind of play back the tape in the January calls, I was saying kind of mid-January is like I didn't think we'd see this kind of correction out of the gate. And I expect a bounce, and we got a reasonable bounce, about 10% off the lows. And so into February, I took advantage of selling into that. And I go back and look, and we can probably look back to at when I said I was selling SPY and XSP, which was the S&P 500, sold that to around 7-8% higher than where it is today, and bought either IEF or TLT, which is bonds. And so, you know, took advantage of those things at the time and made those switches and reduce risk. So I think that's helped a lot because February was much better for clients, much more stable portfolio. I bought NASDAQ puts twice, once I think in late January and then mid-February. So as I look at that, you know, there's not too much I've been doing here in this past 5 days from a portfolio construction changes. You know, there's this few small positions here and there, which I would have liked to have adjusted, but you know, those are small pieces that, you know, we can hold long-term that have lots of potential, but the core of reducing equity risk, which was Russell, S&P, I did a lot of that in February when the markets bounced. And right now it's a wait. Do we need to do more? Do we need to get more aggressive? And the answer is not yet, because look across portfolios today, lots of portfolios up. And if we look at what the market did, you know, S&P was down about 1%, NASDAQ was down closer to 2%. So done a lot of the changes already, fortunately, and now it's just a matter of seeing if we need to do anything else or do anything more.
Gotcha. What you got any great charts for us today?
Yeah, I got some charts. Always got some charts. It's as I look through kind of the chart deck and the charts this week, so much is focused around oil and energy, and I was trying to find some things that are a little bit different. And so yeah, I got the first one with the stock market. So let's get that up there.
Mm-hmm.
This is I think I've referenced them a couple times now, that Alpha and Macro. He puts out some really amazing kind of research just around what's happening in the macro. And he did, I've talked about the 2s and 10s and that kind of inversion, what that happens there. He did a great kind of two-page paper on yield curve and why it matters, if you're looking to learn a little bit more about that. But the long and short of that yield curve is every time we get an inversion, we get a recession after it. But this I thought was an interesting chart because we've talked about international markets for a while, also because international markets under serious pressure with what's happening in emerging markets right now. So this is a look at, on the left chart here, is the relative size of the world stock market. And so if we look on the left-hand side, you look at the breakdown here, and some of this would make sense to you intuitively, but UK 24%, USA 15, Germany, France, Russia, and those are kind of the major markets. And then if we look at where we are today at the end of 2021, the relative size of the world stock market, which is the US here, you go from 15% to 56%. And so, why everyone worries and cares so much about what's happening in the US is the stock market plays a major part in what happens in the world. These other markets and indices, they've all shrunk relative to what they were 100 years ago. And so the US equity market plays a major role, and it's grown. And so one of the things that you think about is, does this continue? And the answer is maybe, but the likelihood is we do see some of these other markets start to grow. And so it's an interesting look at where potential opportunities may be.
Interesting. That's very interesting.
Mm-hmm. Yeah, so this is really, as we've talked about how commodities have gone up, and I talk about food prices, and we've been discussing CPI and all these different inflation risks. And I've been, up until the war started, I've said, this is going to subside. This is going to subside. Supply chains coming back on. And then obviously what's happened now with the war started, and supply chain has gone right back to a challenging environment to get all the different kind of food components that are going up. And as you know, Ukraine and Russia are major contributors to wheat in the world. So food price index is going up. You have certainly that continued inflation risk, and inflation makes the economy slow faster. And so where we have the central banks raising rates to combat a hot economy, is what they say. So you get raising rates and you get inflation going at the same time. What happens is you get it's like the economy running into a brick wall. So this is an important thing to pay attention to. And I think we all think about inflation a little bit differently, but when I look at it and see it, I just mean I just look at it and go, the economy is going to slow fast now that we have this war happening right now.
Mm. All right.
Last one, I did make a few references around crypto and Bitcoin into what's been happening in Russia. And so, there's lots of people that continue to believe it's not an asset class, it's not a currency, it's not whatever. There's lots of thinking around what crypto is. And so, when we saw some events over the past couple of years, we've seen, we had some issues in some of the countries around the world. And when their currency comes under pressure, you would think historically, right, that money is a flight to the US dollar. But individuals, what they've done is their money has flowed to crypto because they could do it themselves and they could do it instantly. And so you had Russia, well, you had Ukraine move to, I think, number 2 on the list on Monday, Tuesday last week of Bitcoin exchanges. And this is a chart of the ruble, but you saw individuals moving their money from rubles into crypto because it gave them the ability to do it almost instantly and themselves online. So, you know, all of its flaws and for all of the potential risks in it, it's presented individuals an opportunity to kind of take control of their money and, you know, allocate it to a place where they could access and continue to survive.
Yeah. Interesting, especially when you see all those images from Russia with runs on the banks and the ATMs, right? No cash available.
Yeah. So that's why people are moving to the digital version, right?
Yeah, makes a lot of sense.
Yeah.
Okay, good stuff. Was that it for the charts?
That was it for the charts. Yeah.
Okay, good one. All right. Just before we move on to what's happening this week, we did have some. Didn't we have some housekeeping? Was it the tax
Right.
packages?
Yes. Yeah. So so we've started to pull together the tax packages that we have. Some of the documentation is still coming out. Scott's been going through and pulling together the packages, and we intend to email them out over the next, let's say, 3 weeks to a month. And it'll be a combination of 2 pieces. One of them will be all the tax slips, which we'll send, and you can access those online. But we will be sending them as well, but you can access those online. The other piece will be gains and losses and the foreign property reports that will come from us, as well as a summary of any of the tax slips you're expected to receive. So, you know, if it's urgent and you need the details now, certainly let us know. But we'll be working through them here over the next few weeks.
Yeah, and we did notice not all of the tax slips are available yet. That's why we're just kind of waiting. We're pretty much ready to go with most of the things, but just waiting for some of the tax slips to come online. So if you go on in your portal there and you don't see your tax slip, maybe just wait another week or two, and then if it's not there, just let us know and we'll track it down for you.
Yep. Perfect. Yeah.
Stuff.
Yeah.
All right, Ben, let's look at deep into the future here of next week, and what are you predicting?
Yeah, I think that the focus continues to be on the war. The big news this month's likely going to be when Powell raises rates, and if he goes 25 basis points or 50. So that is not next week. I believe it's the following week. So for next week, I think we'll continue to see this. The markets are still pretty heavily oversold here, and so you would naturally think that they're going to bounce. However, market crashes typically happen from oversold conditions. So continue to be quite cautious and patient to wait and watch and see where things are. The volatility across every asset class went up this week. And so, yeah, we saw gold stocks rally today nicely, but we also saw gold volatility go up, which is not what I want to see. So, yeah, wait and watch, patience, and let's see how things go. It really is a day by day now as Ukraine and Russia work through their issues. I think if we get a ceasefire, a material one anyways, not one that they talked about this week, which didn't last more than a few minutes. But if we get a material one where they decide to both kind of stand down, you probably get a relief rally in risk assets. You probably get a sell-off in commodities. If we get that environment, then I'll continue to chip away at some other things within the portfolio. But right now it's patience, wait and watch, as volatility is in the high risk bucket right now.
Okay, great. Just give a minute or two here, see if anybody has any questions. Anything you want to wrap up with while we're waiting?
So I been talking to clients the last couple of weeks. We've been just talking about the portfolios because of where and what's happening ahead, and often continue to get the question around, if the central banks talk about raising rates, why would you be buying bonds into this environment? And so this really was kind of the first week that the central banks raised rates. And if we look across the bond curve, bond yields went down. And so prices went up. And so the bond market has already reacted to this news months ago. And so as I've been talking about this, and probably sick of hearing about it from me, but now that they've decided to go and raise rates, the market has started to say, okay, they're not going to be as aggressive, and so bond prices have gone up here with kind of that news. So we continue to think there's lots of room to make money in bonds this year, and I still stick by what I said in December, which is I think bonds could do better than stocks this year.
Okay, that's great.
Yeah.
All right, no questions. Anything else before we kick off the weekend?
I don't think so. You have, if you do want to book a meeting or schedule a call, we're available. We're both going to be here for our March break this year as well. So if you need anything, we're around. But we're lots to do, lots to pay attention to. But certainly, if you want a few minutes to get an update, just let us know.
Definitely. Okay, guys, that's it for this week, and have a great weekend. And we'll see you next week.
Sounds good. Take care.